Hey everyone, it's Michael Valtos here, and welcome to the Orderflows market analysis for Friday, May 5th, 2017. Again, my name is Michael Valtos. I'm the founder and trader at Orderflows.com. And Friday was finally, you got a nice move in the S&Ps. It had been very quiet most of, actually going back into last week, and you finally got some movement late in the session on Friday, around just before the cash close. You got a nice rally from around the 93 area all the way up to 99. So we're coming right up on new contract highs, and we'll see what's going to happen over the weekend with the election in France. Now, the big thing on the calendar on Friday was the employment data, and it showed the unemployment rate falling to a 16-year low of 4.4%. The non-farm payrolls rose better than expected, 211,000 in April. Now, average hourly earnings did manage to rise about 0.3% month on month, but then again, the prior month was downgraded 0.1%, and the year-on-year rate actually going into reverse at 2.5%. And why is that important? If you're going to have a healthy job market, you want to see average hourly earnings increase, not stay stagnant. And you hear stories of people making less money now than they made 10 years ago. That's not a sign of a healthy economy. But hopefully, with our new president making America great again, things will get better. Now, I'm going to talk about order flow. And again, if you're new to order flow, what makes order flow so so good? I hate to say so valuable, but makes it a very useful tool for most traders is because order flow deals with the reality of the market. What's happening, seeing the market moving forces in action, and to judge what's going on, rather than relying on a technical indicator that's taking an average of prices over a period of time. With order flow, you can see what's happening between the buyers and sellers, this internal struggle in the market. That's what you want to be looking at to make better trading decisions. So before we jump in, the brief disclaimer: this presentation is for educational and informational purposes only, and should not be considered a solicitation to buy or sell a futures contract or make any type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. The tools I'm going to use in this presentation is the Orderflows Trader, which is the footprint chart, the Delta Scalper, and the Delta Surge. The Delta Surge is free on my website, and I'm going to show you some examples of the Delta Surge, where they work, where they don't work, and explain to you really how to use it a little bit better. People have been downloading it recently off my website, and sometimes they don't understand how to use it. It's pretty basic, but still, when you download it, first thing you have to do is restart NinjaTrader. All these indicators, they run on NinjaTrader, and you could download a copy of NinjaTrader for free. I think you still can. And you can run the indicators on there. They also have a paid version if you want to route your orders through NinjaTrader to your broker. So anyway, let's jump right in. The real interesting move, the big move in the S&Ps happened late in the session, and it was the Delta the Delta Surge that really keyed you in. Now, Delta is an aspect of order flow that it's one of the the core the core building blocks of order flow analysis. And what it does is it tells you the net buyers and net sellers, who is in charge of the market. On a market moving up, you want to see Delta be positive. On markets moving down, you expect to see Delta be negative. And 246, you're coming into the high, you got buying imbalances, 1, 2 here, and you got the Delta Surge kicking off. So you're going into the highs, buyers are really coming in, buyers are taking control of this market, and we make this nice move from 23.93, 93.5, all the way up until the close, at 23, when we hit 23, what was the high, 99 or so. But that was a nice move going, and going into the close. And it was there. It's very obvious. It doesn't take a rocket scientist to determine this. Again, every time you make new highs or new lows, question you should be asking yourself: are we going to continue making new highs or make new lows, or make new lows, or are we going to come off these highs or lows? In this case, you could, by reading the delta, you have a fairly good accurate depiction of the market that buyers are taking control of this market, and we're probably going to go higher, and we do. So that was like to me, I think the biggest no-brainer trade on Friday. Okay, the next market I'm going to talk about is crude oil. Crude oil has been pretty volatile the last few trading days, and you're getting some nice movements. And Friday did not disappoint as well. Now, what I'm going to talk about on crude oil is the Delta Scalper, which is a paid indicator, and Delta Surge, which is the free indicator. And you'll see some different variations. They read Delta in different ways, and so they're not the same thing. They read Delta completely different, so then you're not going to get them kicking off at the same time. That said, now one of the basic things, I said anytime you have any sort of analysis or indicator and you want to buy or sell, get the confirmation in the bar as well. If you're looking to sell, the bar should be low. The bar should be red. It should be a red candle. You should be closing the bar that you get an indicator firing off on. You also should have the price action in the bar. So if you're getting a sell, right, you should have a red candle, meaning the bar closed lower than where it opened. Here you got to sell, and the bar closed higher than where it opened. Just because you have an indicator fire off doesn't mean that you have to take the trade. Again, order flow is not a red light, green light system. You could have a delta signal here, like here you got negative delta with a green bar. Again, just because it's not always going to be negative delta and a red bar, or positive delta and a green bar. No, perfect example is here. You got a down bar, you got positive delta. Here you got negative delta and an up bar. But there's different ways to read this, and if you're taking a signal, a sell signal, you don't want the price in the bar to be trading higher by the close of that bar. What you want it is to be the bar to close down. So people, they don't understand that, and they just take every signal that appears thinking it's either going to work or it's not. That's not right. What you want to do is everyone says, I got to have an edge in the market. Well, you're giving up an edge if you're looking to sell and the bar itself is closing higher, right? Why would you do that? People do, but then they write nasty comments about, oh, your indicators don't work because I lost money on this trade, when you're not even using your basic analysis of filtering out trades. Like I said, people, everybody wants everything done for them, but it can only be done for you up to a certain point. You can't be a robot in trading. You use your mind, right? The market is made up of different traders. It's not made up of different robots. And what you see nowadays, what I see nowadays is a lot of people coming into trading that have I don't say programming experience, but I think nowadays, with computers, 30 years ago you didn't have basically computers for trading, but people are familiar with coding, and what they do is every line of code has to be correct or the whole thing doesn't work. And basically they say, oh, I got a sell signal here, it didn't work. Well, they're removing this one step of analysis. Yeah, sure, I could have had a program to say only give a sell signal when the bar turns down, or only give a buy signal when the bar turns higher. But there's going to be cases, you got to use your head. I hate to say use your brain, because I had a senior person there at JP Morgan. He would always say that to people, said use your brain, and it was kind of degrading to hear that. We would joke about it. We'd say, hey, use your brain. Then we'd all have this laugh. But it's just another way to call people an idiot. But the best computer for trading is the one that's on your shoulders. And if you're not using that in your analysis, then you're leaving a big thing out of it. So anyway, so you're going to see times where it does fail. But if what you'll increase your percentages is taking the trades that make sense, not just every single trade. There's going to be trades that make perfect sense, trades that are borderline, trades that make no sense. If you get rid of the trades that make no sense, then great. Borderline trades, yeah, they'll have some. Honestly, there'll be some that you like, some that you don't like, and some that just make perfect sense. And one of the ways, for me, I think that trades make perfect sense is you get the underlying price action of the bar to confirm the buy or sell signal. So, you know, this again is 7:30 on 3 minutes after non-farm payrolls. It probably wouldn't be taking any trades anyway. 3 minutes passed. So this is a sell. This one failed, but again, you probably shouldn't be taking that. Here you get a sell. This is the type of sell you want. You know, it's coming after a swing high. You got the down candle in the bar. I mean, does it come back up and fail? Yeah, but you know, this one at least got a little bit of movement down, then failed, rather than just, you know, completely against you from the get-go. You know, I know people that will trail or stop and, you know, maybe broke even or something on this trade. I don't know, but you know, I'd over the long run, taking the trades, you know, the sells with the red bars versus sells with green bars is going to put you ahead. But again, you know, non-farm payrolls is a big number for the markets. And again, you know, I don't know if I'd be trading so close. This is 733, 737. Non-farm payrolls is one of those, you know, I like to give the market at least 15 minutes, preferably 30 minutes to settle down and just sort of go on its normal trading courses. So, excuse me, anyway, that said, here you get another sell signal. It got the red candle, that's what you want. Next bar down. Next bar up, up, and then back down again. And then you're just sort of going sideways here. Now, you got the sell signal at 7:48. It's already 8:03, so about 15 minutes. You know, it gave you one push lower, another push lower, now sort of circling back up to, you know, where the signal occurred. Then here you get a buy signal, green bar. That's what you want. You get 3 bars up, 1 bar down. Again, it's the delta scalper. Don't be looking for this to be long-term trades. You know, the reason I called it the delta scalper is because I was looking for quick moves based off the delta. Here you get the nice bar down, then it comes right back up, just basically going sideways on you. This is the delta surge, this green, but it's coming on a red bar, so probably not very good idea to be taking that. Even though it comes downward, stops you out, and then makes the move. You know, what I'd prefer is the moves like this, where it's the green bar and the delta surge. Excuse me. Then it you know, comes up, makes new highs, starts going sideways, sells off again. Here you got delta surge giving a buy, but it's on a red bar. You know, it's not going to be very effective, and it just comes down lower before going up and making new highs. This is also the delta surge here, also with the stacked buying imbalance. Again, you get up, you make you know, next bar is up, next bar is up. Then you got the delta surge scalper giving a sell here, comes off. This market's pretty volatile this morning. You know, you get moves, but they're short-term moves. You know, over the next bar or two. Any other signals? So you got these stacked imbalances. I won't get into that here. Again, yeah, you got the delta surge this time, given the sell. And this is what you want, all right? You want the red bar. Then you see you're making a nice move down. This is the delta scalper here, giving you a sell right up here at the swing high after this nice move from 46.22 all the way up to 46.56. You got a sell. Come down, you got a buy here, and the delta scalper giving a buy. Again, it's the delta scalper. It's not the delta long-term trader. So you should just be looking for the quick hits in and out. I know people that do have this indicator, and they've programmed the trading system around it for quick hits and trail their stop to get out really quick. Here's a delta surge giving a sell. Red bar, that's what you want. Another delta surge here, red bar, but honestly you'd be short from, you know, in here. There's no reason to be taking the next one when you're already short. This was a nice move. Then you got the delta scalper giving a buy here, a nice little move up. Delta scalper though here is on a red bar. That's not where you want to be. Delta surge rather. That's not what you want to be taking. You don't want to be getting long on a bar that's turning down. Closing negative. Time is it's 12 o'clock here. Delta scalper giving a sell here, and you get a nice few bars move lower. Delta scalper giving a buy. Nothing happens. This one didn't work out. You saw a lot that did. This one didn't. And what time is it here? It's 1 o'clock. 2 o'clock. Well, that was it there. That was the crude oil. Okay, next market is soybeans, just so you can see, you know, how these things work, and same concepts work in different markets. And soybeans is obviously different than crude oil, and different than bonds, and different than S&Ps, But you know, the same concepts apply. The same concepts apply no matter what you're trading. And here you have your high in the soybeans. This is 833. And then you got the delta scalper giving a sell. Delta surge follows up with another sell, and you make a nice move from 981 all the way down to 978 area here. You got the price rejector giving a buy. You got a single print. You got a ratio there. Rally back up towards the high. Don't hit the high. Got a ratio up there. Sell. Come down in here. You got stack sell and a balance, and the delta surge giving a sell, but it doesn't work out. It just goes. You know, this one would have stopped you out. Again, you know, I'm not just trying to show you all the times they work. You know, when they don't work out, I also want you to see that. You know, again, you know, my thing is not necessarily just to sell you software, but you know, I want to sort of educate you and show you times where things don't work out, because you know, there are times where not everything comes up roses. Here you hit the high again, double, you know, the high that you made here earlier. First time you trade 37, now you trade 142 lots, and then you hit it again. You trade 10 lots, start coming off. You've got the delta scalper giving a sell here. You got a couple of imbalances here. Got the delta surge with stacked. Sorry, you got a stacked imbalance rather. It's not a delta surge or anything. This is just a normal stacked imbalance. And you got a nice little move here. It happened really quick though. Later, you got the delta surge giving a sell, and you got a stacked imbalance. And you know, we moved from the 979 area, 979.5 area down to the 976. Pause a little bit. More selling comes in. You can see it being picked up here in the delta surge. Come down into this low. I'll say low. It's the opening price of the day, 973 3/4, and you sort of bounce around. Got another delta scalper giving a sell here, but again, that's at 108. The market closes at 115. So you know, this one you probably wouldn't have been taken because it's too close to the close. But you know, there were some nice moves to be had in the beans. You know, this was a nice one. You could have got in 979, take it all the way down to at least 975, 974. That's a nice move. Now the other thing, again, that I wanted to talk about, you know, just really quick on, you know, the importance of the delta surge, you know, and how I came up with it in my own trading was, yeah, I'd be looking at minute-based charts. Okay, this is not a minute-based chart. This is a range-based chart, and you're just going sideways here. You know, up, down, bearish, bearish, not going anywhere. But you could see how the delta is. You know, it's kind of flat in here. Once minus 175, 121, 85, 90, but then it starts picking up. 90, minus 288, minus 460. That's how you could see the buyers are taking control. Or sorry, rather, not the buyers, the sellers. The sellers are starting to dominate this market, and then they take over, more selling down here, and you know, that's what you're looking for. That's how you know, you get use out of the delta surges on a market that's going sideways. Even back here, right? Look at this. We're trading basically between what is that, 982 and roughly, so call it 982 and 980 even. So about 2 cent range back and forth. And then you see it just really pick up here. Boom, sellers really come in here. You even got a stack sell and a balance, and then it just falls over from 980 all the way down to 974. You know, that's the beauty of it. I mean, there's times it works. This one, it didn't work, honestly. I would have expected more out of this one, but it just wasn't happening here. But again, you know, I want you to see the times where they do work, times where they don't work. Okay, so the next market I'll talk about here is the bond market, and you know, there's some nice trading opportunities in the bonds this morning. You had this high up here, 152.10. First time you hit it, you don't have a ratio, you do have a divergence. Second time you hit it, you don't have a divergence, you do have a ratio. And you know, I've talked about this O2X trade where you have the high with the ratio, you get the pullback within you know, 2 ticks of that high to get in. This one, you know, if you listened to me and you did it, you would have gotten in here, because at 08, you know, it was 08 bid. So if you're offering at 08, you got this unfinished business here, so you can see it was 08, 09. So there was a chance to get filled, and you know, you got a nice move from. Oh, sorry, this is the high is 08, not 10. And then you know, from basically 06 all the way down to, you know, down here where you can see you got your first buying coming in here at you know, 24, that area, you know, 23. So that was a nice trade to be had. And this is the delta scalper given sells. So yeah, delta scalper given a sell, but the bar is green, so I'm not really interested. The second time, this is what you want. You want the delta scalper to be giving you a sell, and you want the bar to be red. So if you took this one and your stop is just right behind here, you'd be stopped out. But if you took this one, that made sense. This first one doesn't necessarily make sense because it's the red bar, or sorry, the green bar. You want a red bar if you're taking a sell. You want the price action to confirm. That's why I didn't have it programmed in there as something, because one, I didn't think people would be I'll say silly enough to be taking taking sells on bars that are trading higher where they opened. And two, I still like to do some analysis. I do think there should be some analysis on the trader's part. And so this again, if you're not doing the O2X, if you're just taking the delta scalper by itself, it's giving you a nice sell signal here, and again, it's giving you a nice little move down here. You get the delta scalper buy. It's a green bar, that's what you want, and it's giving you a nice little move there. And we just sort of go sideways before or later in the day. Sorry, this is around. Here's 8:13, about, and 40 minutes later, 50 minutes later, starts selling off. Hit the low. Got the price rejector given a buy, but it's a divergence, no ratio. Here was a delta scalper given a sell, didn't work out. It just sort of went sideways all the way up until the close. Okay, this is the euro currency, and this is the delta scalper. Again, there's 3 examples, 3 trades here. 2 worked out, 1 didn't work out. And this first one, red bar, that's what you want. Second one, red bar, that's what you want. You got a little bit of a move lower before it turned around and started going back up. Then here you got a delta scalper, but it's a big green bar. That's not what you want. You want this, you want this. You want the red bars for sells. You want red bars for sells. Now again, I'm just going to just in case people say, oh, he's only showing times that it worked. It didn't show signs that didn't work. This is the delta surge again, going back until 7 this morning. Just to see. Again, 7:30. You're not going to be trading it during the non-farm payrolls. I could show it to you, but the market's moving super fast. You're not going to be really trading it at that time. Here's another example. Delta scalper gave a sell, but it's on a green bar. It's at 7:06, 25 minutes before the number came out. Would you be interested in taking it? Probably not. But again, it's a green bar. You shouldn't be interested in taking it. And this was earlier European session. Now, where am I here? So let me go back to that time here. Okay, this is that little grouping here. Sell, sell, sell. But this last one you shouldn't be taking. It's the green bar. And I'll show you something. For all of you that are interested in it, it's a nifty little indicator. Boom, you got your high of the day. You got a ratio with a divergence, which is good enough for taking a sell. You come back up. You wouldn't have been stopped out if you'd taken this trade. But you hit that high again, so it's a double top. And this time you got also a divergence, but also you got the delta scalper giving you a sell. And what do? You're at your high of the day. Really, the first sign here, 37.8, this ratio, the divergence, single print, all that is telling you should be looking to sell anyway. Come back up here, it's screaming at you, sell. I mean, that's the beauty of what order flow does, is it shows you what is happening in the market, and it's up to you to act on it. I mean, if you see things that make perfect sense, to me these highs up here make perfect sense to be getting short on. I don't see any reason to be buying, looking for us to keep going higher. Even though you hit the high, you come off, start coming back up. I don't see any reason to be getting along at this point. Instead, I get another sign to be going short. And what does it do? It sells off from this high up here at, what was that high? 21.5. But realistically, you could be getting short somewhere around 19, 18, 19. And, we just go sideways to, well, saying sideways, but, you didn't get a big move down. I mean, you traded down to 08, so at least 10 full ticks in the euro currency. And you just bounce around sideways for the rest of the afternoon. And then, later it did rally. I'll say rally, but I guess it did. Going into the close, made that new high. But again, to be sitting here from, these highs at 10:57, 11 o'clock. It's an hour later. You're just sort of hanging around, 2 hours later. You get out. You don't sit there, oh, I'm going to hold it till the close, waiting for the market to continue selling off. No, it's had an hour, it's had 2 hours to make the move. It's not going any further. You get out. I know some people will. I know types of people out there. They'll send me this chart saying, "Oh, he gave you a sell here. I got short, and then I got stopped out up here." Well, why are you getting short at 11 a.m. and you're holding it? You have all this time where it's in the money for hours, and then it's not till 2 o'clock that it starts moving against. I say moving against, but moving back up to the 20 area. Then you're getting stopped out right on the extreme close of the day. If the market is going sideways for an hour, it's what's going to happen? Well, you got two choices. It could either continue going sideways, or it can go against you, or it could go in your favor. So you got 2 out of 3 choices that are telling you to get out. One, that it's going to go sideways some more. So if it is, might as well just get out now. Or 2, it could go against you. Yes, there's 1 chance out of 3 that it can continue going down, but unless you really see something outstanding in the order flow, or anything else, any other reason, don't sit in the trade. Don't get married to the trade. But some people, they do. I mean, unfortunately, that's one of the problems with traders that they face, is sometimes they don't know when to get out. But if you're in a position and you're not getting any confirmation that the position is going to continue in your direction, then you get out. It's not that difficult. I mean, think of it in real life. We've all been in relationships that just aren't working out. At some point, you got to cut that relationship and get on with your life. You don't want to prolong your suffering, and the markets are the same way. The markets, and people think the market is something rare, that has its own mind. No, I mean, the market is made up of people and their emotions, and what happens in your everyday life is also happens in the markets. It's just in different terms, and you got to realize what the similarities are to what is going on in your personal life and your everyday life. I mean, going to the grocery store, making decisions on should you buy something on sale or not is basically price action, order flow. Okay, so this next one I'm going to show you is one of my other proprietary indicators. This is the transition, and transition is an indicator that I created, that I used to do the analysis myself, and I just wanted something to show it up on the screen for me so I could free my mind up to work on and look at other things. And the reason it's called the transition is because it wants to find areas where the market is transitioning from buyers to sellers, or in other words, supply-driven market to a demand-driven market, and that's why it's called a transition. And it wasn't very many signals on Friday, but here, okay, going back, you can see there's nothing in there. So here just before 8 o'clock, you had a small buy. This is a mini Dow 100 tick chart. You had a buy. Yeah, market went up a little bit, nothing special, came back down. Then you got this nice sell here, immediately shot down, came back up, shot down some more. I don't think you'd been holding it all the way up here for it to come back down. Realistically, look for the mini Dow. As soon as it starts going against you, get out. Trail your stop. Nothing in here. Then late in the day, it catches the big move, from 9:10, all the way up to, basically all the way up to the close. So that's a nice move there. Even got this nice little squib of a move. Nothing special. 9:10 down to below 900 before sort of working its way back up, but this is really the move that you want. Okay, lastly, I'm going to talk about the bunds, German bunds today. And it's just to reiterate, taking trades in context of the market, right? If you're looking to buy, look for reasons to be buying it off the lows. So here, 811, you've got the new low of the day. You got buying and balance, buying and balance, buying and balance, stacked buying and balance here. You got delta surge giving you a buy as well. Those are the trades you want, ideally. You're buying it there off the low. You get a little bit of a move, go sideways on you before you got the delta scalper giving you a sell. Come down into the low. Again, you got the delta scalper giving you a buy. It's on a doji bar. Again, it's up to you if you want to take it or not. You do shoot up a bit, then just sort of go sideways, come back down into lows. Now you have the stacked selling and balance on the low of the day. Do you make new lows? Is it a winner? Yes, technically. I mean, you do make new lows. by about, what is that, 50, 54, get down to 49, so about 5 ticks, and just hanging around there going sideways on you. So, is it the greatest trade? No, not really. Again, it's one of those things, try and take trades in context. Yes, it could go lower. It could go 1 tick lower, and it did go lower, by definition. Or, honestly, I would expect it to go a little bit, I personally just find it's got more capacity to go up, if you're buying it off the low than, selling into the lows. Now, again, that doesn't mean that you can't sell into lows. You can, because the market can continue to go lower. But, read what you're, over time, look at your trades, look how well they perform. Are you finding yourself repeatedly selling into lows or buying into highs and those trades not working out? Or your trades that have bigger winners, are you buying it near the lows or selling it near the highs? Again, it's I saw a quote, right? There was a quote by somebody, Paul Tudor Jones. Obviously, everybody's familiar with him. Let me just dig out the quote if I could find it. Tudor Jones: I believe the very best money is made at market turns. Everyone says you get killed trying to pick tops and bottoms, and you make all your money by playing the trend in the middle. Well, for 12 years I've been missing the meat in the middle, but I've made a ton of money at tops and bottoms. Again, it's not trying to pick tops and bottoms. It's trying to pick when it's turning. Those are the moves that you could get. Like here, we're turning, you're getting a buy signal here. Here it's turning, you're getting a buy signal. These moves have big capacity for movement. So again, you got to decide, what kind of trader are you? Again, I'm not saying, are you trying to pick tops and bottoms? No, but if the market is telling you, hey, this is a good buying opportunity, don't pass it up because you say, well, I'm not trying to pick tops and bottoms. I don't want to do that. If the market is saying, hey, buy it here, idiot, you buy it, plain and simple. What more can I say? So anyway, that will conclude it for today. It's been an interesting week. Again, Sunday you got the election in France. It'll be an interesting reopening of Globex, the electronic session, on Sunday night U.S. time. And I know I'll be I'll say glued to the screen, but I'll definitely be watching it and seeing what develops. So to learn more about order flow trading and the software I have, visit my website, orderflows.com. And thanks, and have a good weekend, everyone.